John, and you know all about SGR.
I do, and I appreciate it. And it does bring up, part of the issue of that is, payments to Medicare is part of our outlay.
Yes.
And our debt that we're passing on to my children
Yes.
is the sum of our expenditures and our revenue. And I'd like to talk to you for a second about revenue.
Sure.
In the Reagan years, I believe the revenue as a percent of GDP was about 19%. In the Obama years, it's about 14.5%. And as a disclaimer, I'll tell you that I am a Democrat, and I do think the Democrats need to make some hard choices on spending, on eligibility for Medicare, government entitlements, defense. But what I'd like to know is philosophically, as a Republican, if you could tell me why I, as a physician, one of the 1% probably, shouldn't pay more in taxes, and why yesterday the Republicans in the Senate voted to continue tax subsidies to the oil industry, which the House did in May of last year, and we voted with that. When we have such a debt issue, why should Exxon, that has $10 billion of profit a quarter, get my tax-supported subsidies?
Yeah. So, actually what we do in the budget I voted for is put all that on the table and get at the capital cronyism that's running wild in Washington and all the special interest breaks. I think they all should be on the table. I met before I came down here this morning with a group of alternative energy providers, wind, solar, geothermal, all of that in Portland. And of course they're concerned because the production tax credit is going to run out for incenting renewable energy. And I told them, same thing, all of it needs to be on the table. The ethanol tax credit now has run out, as it should have. And I think all of this, all these breaks, all these deductions, a lot of them, frankly, go to the upper end income. And so as a consequence, in the budget that was passed, budgets, first of all, are at the sort of 30,000-foot level with instructions to committees, and they go to work on the actual individual programmatic issues. The Ways and Means Committee, headed by David Camp, is been working on reforming the tax code to close the loopholes, get rid of crony capitalism, if you will, and reduce the rates and make us more globally competitive. I want to show you a couple of charts, if I could, with your permission, on both of the topics you've raised, because you've hit on the head a couple of things we need to work on. One is Medicare, and one is tax policy. Let me make sure I grab the right one here. So this shows you if nothing's done on Medicare, what happens to the trust fund. This is current law. This is on the books. You know this. We all know this. So this is 2010 in the Medicare trust balance. We're now over 50% general fund support for Medicare. By 2019, you're down to $21 billion in the fund, and by 2020, which is not that far away, you're at zero. That's why I commend what Senator Wyden has suggested, that we look at a different way. First of all, anybody over 55 in here besides me? You are protected. This isn't a discussion when it comes to Medicare and Social Security. We're not touching your benefits, nor should we. I witnessed my parents, my wife's parents, and what they went through in terms of Medicare and how important it is. Home health care. I just got a national award for my work on home health care. These are critical programs. What I want, though, is for this young lady, when she's Medicare eligible, and I know 55 seems like near-death experience probably, that she has a program that works for her and a country that's not bankrupt. We've got to do both. So, when it comes to tax policy, I want a pro-growth tax policy. If you go talk to Nike and Columbia Sportswear, both of which are headquartered here, they've got enormous cash reserves sitting overseas because they're a global company. And it costs them more to bring it back here than to borrow money. There are trillions of dollars offshore. We have one of the highest, I think once Japan lowers their corporate tax rate, we'll have the highest in the world. Yeah. And so we keep capital offshore. Canada's just lowering theirs to 15%. We're going to put it all on the table. And so when we come back in 2 weeks, the Ways and Means Committee is going to start this discussion on steroids about what a pro-growth tax policy for America should look like. And that means collapsing a lot of the loopholes and collapsing a lot of the giveaways and all the sort of cronyism that sneaks into the tax code over time. Reduced down to 2 rates. For lower income, it would be 10%. Upper income would be 25%. Yes, sir. You have a fair tax idea.
Yes, sir.
You want to describe what fair tax is?
Well, I can do that shortly, but you got an hour? No.
Nope.
What, the gentleman's question back here, your response is just giving me so much room to talk about. First, let me introduce myself. My name is Doug Lefebvre. I'm the State Director for Americans for Fair Taxation, nonpartisan organization that supports legislation before Congress, which has been there for 17 years, tied up in the House Ways and Means Committee, primarily for lack of sponsorship. This year, that legislation has 67 sponsors in the House. To get legislation moved forward, you need 100+ sponsors. We'd love to see Congressman Walden as sponsor number 68 for that legislation. You'll notice a lot of these stickers out in the audience. We're out here, Congressman. We want your support.
But describe what it is so people understand what fair tax would do.
Fair tax is legislation that will make us the most competitive nation in the world markets. And we can talk a little bit about that later, but it is a replacement for, not reform of, an overbloated and corrupt tax system, the federal income tax code. It replaces that. All the revenue from federal income taxes, estate taxes, gift taxes, payroll taxes, corporate and personal income taxes, replaces that with a national retail sales tax. A progressive national retail sales tax, not a regressive sales tax. It's not the sales tax of your grandfather.
And what rate?
The rate is 23 cents on every dollar spent as compared to an income tax. There's really 2 rates when you talk about it. The other rate is sales tax, is pure sales tax rate is 29.87. So it's roughly close.
So you'd get rid of the federal income tax.
Get rid of the federal
You'd replace it with a national sales tax.
Get rid of
It would be somewhere between 23 and 29%
Right.
of every purchase.
Of every purchase.
Anything exempt?
The only exemption is educational tuition.
So would that include services as well as goods?
And it's goods, new goods, and services. New goods. Used goods are untaxed. So you as an individual gets control over how much you're going to pay in taxes. You do that by your spending patterns. You need a new vehicle. You can decide whether it will be a brand new vehicle that's subject to sales tax or a used vehicle that is not subject to the sales tax. So you can control your tax load. In bad times, you can decrease your tax load by how you purchase. In good times, you'll probably buy that new car when you have the disposable income. This tax structure that we're talking about replaces a system that I think we can all agree is in deep trouble. All you have to do is listen to the radio, watch your TV. The growth rate in advertising right now, the biggest area of advertising you hear all over the place is for tax resolution services.
Now you're coming up on tax day.
That's right. Those commercials say, do you owe $10,000 in taxes? Do you owe $20,000 in taxes? We can save you money. They can't make money if there aren't a heck of a lot of people out there exactly in those circumstances. We need to get rid of the tax bill.
All right, thank you. Yes, sir.
My name is Gary. I'm from Talent. I was curious if you signed the Grover Norquist pledge not to raise taxes.
Yeah, I did.
Would you repeat the question?
Oh, I'm sorry. Yeah, he asked if I signed the No New Tax Pledge. I did it back in, I think, 98 or 99. Said I wouldn't